Good afternoon, everybody. Welcome to this week. And boy, what a week it has been. Oh, the market. Oh, the market certainly had its ups and downs in the week. A little bit of red, a little bit of green, a whole lot of a whole lot of volatility for sure. It's the weekend though. So at least things are a little bit calmer, and there's a big football game going on this weekend. Of course, we're talking about um, the CFL. We're talking about the CFL. So we got Montreal, and all right, here's the Montreal's playing somebody from the West. What for some reason I'm thinking Winnipeg, but I think Winnipeg might be where it's being held. So you guys will have to let me know. I don't know a lot about football. I really don't. So I probably shouldn't have even mentioned football. That's how little I know. But I do know there's a little bit of controversy. Apparently, they're changing some of the rules to make the CFL, what is it, a higher scoring affair, perhaps bringing it a little bit closer to what they have in the United States with the NFL. That, and I only know that because I heard it on the news. just to just to put that out there, just to put that out there for you guys. Yeah, what can I say? What can I say? And well, we have hit that midpoint in November. So this means this means we can start to look forward to tax loss harvesting. So this is when the big companies will start to look at their balance sheets and they'll be like, okay, where do we want to be sitting on on tax day? Pretty much on tax day. So a lot of times, what they'll do is they will take losses on purpose, which is called tax loss harvesting, and they will use those losses to to help them pay less taxes on their other positions that perhaps are in the gains, that are in the green column. So this happens every year. And what it does tend to do is towards the end of November, we can see a little bit of downward selling pressure. Now, normally it's just the institutional guys in the last couple of weeks of November who are doing it. You don't really see the public jumping on ship too much until that first 2 weeks of December. So basically, for about a month now, there will be that constant downward pressure of tax loss harvesting, and there could be some buying situations there if you're looking to find if you're looking to find a deal. Now, if we have any other kind of negative stimulus in the middle of tax loss harvesting, that could create a pretty good buy the dip opportunity for sure. So, this is one of the things I'm going to want to know from you guys. What are your plans? Do you got money? Are you sitting on the sidelines? Are you looking for something this month, or are you perhaps waiting for December? Now, of course, after we're finished all of this tax loss harvesting, that's when we get our well, technically, technically by the middle of December, things will start to calm down, but towards the end of the month and into the very beginning of January, that's traditionally what we call the Santa Claus rally. If we have one, and we probably will. Um, yeah, so we're going to see how this all unrolls as we move forward. But in the meantime, let's check in with it. Let's check in with you guys. See how you're doing. And Lord Fubar is in here first. Um, sometimes I get emotes or emojis or emoticons. Sometimes I don't. This here looks like either red. Well, okay, we got red, we got green, we got a purple in the middle. So yeah, that purple is probably a strained investor who's in the middle of a red and a green market, not knowing what to do. There we go. I may have gotten that one. Prairie's in the house. Hello, Prairie. Let the harvesting begin. Afternoon, everyone, and happy Sunday. And go Rough Riders. Yeah, so that's the Western team. And I'm trying to think, is that no, I'm trying to I don't know. I don't know which city is that. That's not Edmonton. No, Edmonton is the same as the Ottawa team. What's the name of our team? Oh boy. Oh dear. The Alouettes is Montreal. That I do know. And Claude is saying, hello, go Alouettes. Pierre is in the house with a hi, Candace. And Jim is here. Hi, Jim. And we've got Mary. So Mary is our official captain of that like button. So if you haven't yet hit it, do me a solid, hit the like button, turn it blue. That will push this out on the algorithm. And I'm going to have some coffee while you guys are doing that. And this is a really good coffee. Mm. Oh, very good. All right. We have Will in the house. Let's see here. Think I will take a L on my light speed position this year. It's been a true dud for quite a few years now. Yeah. And you know what? Here's the thing. I know that there's people out there that say never take a loss. There's people out there that will say you should not take a loss. But here's the reality of the thing. If you sit in a losing position for a year, 2 years, 3 years, um, that money is just not doing anything for you. And there are probably, if you see a better opportunity, something that is growing, if you take that loss and move it into something that's growing, something that's going to actually give you a return, you'd be surprised. Well, if you had did it 3 years ago, you wouldn't have, you'd probably be much further ahead than holding out because you'd never want to take that loss. So sometimes it does take sense. And we're not even talking when it comes to tax loss harvesting. We're just talking about straight up losses. Sometimes it takes sense. It makes sense. Sometimes it's the best move that you can make for the long haul. And I've got at least like right now in my swing trades, I've got at least one of them that is starting to feel like a loss, But and I'm fine with that. I'm fine with that. I'm not going to leave money there forever for sure. All right. A Roku from Stittsville is saying, Happy Sunday, all. I'm harvesting a few corn chips and hummus this afternoon. Nice. Are you watching the game? Is that what I'm getting from this? Uh, Gursky says, hello, good afternoon. MGM or MGN, Money Guy Now. Can you share your banana bread recipe? uh, it's funny. I don't even have, I don't actually have a banana bread recipe. I love banana bread, but I don't have a recipe. I don't have a recipe. Normally it's prepared or I'll get it at the bakery. Uh, let's see. Morley says, I am here. Hello, Morley. Saskatoon. Okay, okay. So, all right, Saskatchewan. Uh-oh. I haven't seen Chad in a bit, but if he was here, he'd be disappointed in me for not knowing. No, or Regina. I don't know. Nobody seems to know. We may all be bad Canadians. I'm just putting this out here. We may all be bad Canadians. Oh boy. Bismarcky, happy Sunday from a warm and sunny Cayo Coca, Cuba. Oh, yeah, it's cold here today in Ottawa. I will tell you. I mean, it's around freezing, but but there's a wind, and that wind is pretty cold. Now, I have not been outside to experience it, but I can tell. I can feel. I can when the wind's blowing really cold. I can feel it coming through the windows. I can really feel it coming through the windows for sure. All right. A says, hi, Candace. What do you think about markets going down? it's it's kind of this thing. I've been expecting a bear market for a long time. I'm not saying that this is it, but boy, I'll tell you, if this keeps on going. Now, I think we got one of the big things coming up is Nvidia earnings call. That's coming up in what, about 2 weeks? That I think is going to be a very big turning point for the market, because what's been happening is a lot of what we're seeing, a lot of it is tech driven. Tech is, we've had tech earnings for the most part. Most of tech is already reported, and investors are still not happy with AI. A lot of people say AI is a bubble. Heck, maybe it is. I don't think of it as a bubble in a bubble sense. I don't think it's like the same as like .com. And I still have a lot of faith. I still have a lot of faith in AI and where it's all going, but there's a lot of uncertainty. And now we got tax loss harvesting adding to it. So it's going to be very interesting. So even this coming week, oh boy, I'd like to say that it's going to be flat, but I think we're going to get a little bit. I think we're still going to see some instability through this coming week. I'm still on the red November kick. So I do think November is going to be red. And well, let's see where we are at right now. Let me just pull this all up here. All right, let's head over here to. All right, so here is the TSX. All right, and let me. Ooh, I'm going to zoom in a little bit on this here. There we go. We'll just zoom in a little bit just to take a look here. So this here is the TSX, and I wanted to make it big just so we can sort of see where we're at. So this blue line, this is where we entered the month. So that basically, well, actually, it's where we exited the last month. Just to be clear. So if we're above this blue line, and we currently are, we're just a little bit above it. That has us so right now we are technically in a green November, but look at the ride. And you know what? Maybe I should actually, there we go, crush it a little bit. So we came into the month, we went down. It's kind of interesting. It's kind of like here's our first week down, and then we went up, down, and a little up. So this week here was a little bit of an accordion style. So what do I think is going to happen here? I don't think we'll get as high. I don't think we're going to peak above that. I think we'll get some movement up. I think we'll also get some movement down. But I'm still thinking by the end of the month, I think we're going to be down here, not far. I don't think we're going to be far into the red, but I do think we are going to be in the red for sure. All right. Jack says Bitcoin nuking. Oh boy. And I've not looked at Bitcoin this weekend. And oh boy. Yeah, look at this. Oh, that is concerning. I don't like to see it down that low. I don't like to see it that low. So obviously, we've been playing with that 100,000 point as kind of our safety level, and I don't like seeing it below 100,000. And now that we're down at 93, we're going to need to watch this through the week and see what it does, because I still think, and I'm going to say it right now, I still think that we got one more play in Bitcoin before we go into a crypto winter. But I'll tell you that's a little concerning. That's a little concerning. Obviously, anything that's holding Bitcoin is going to be. Well, here's the thing. Like, let's take a look at this right here. So, where is Friday? Friday's about here. So yeah. So since over the weekend, it's fallen. So, Monday morning, when things open up, you're yeah, like your strategy stuff is going to be down. Even HBTE, I think it's going to be down. So we're going to definitely see some interesting stuff, I think, on the charts. When things open, all of the spot Bitcoin ETFs will be down. And let's just put it this way. If you think this is the bottom, what's going to happen when a lot of newer Bitcoin investors, when they see especially the ones who are investing in the ETFs, when they see how far Bitcoin has fallen, there might be some panic in the market on Monday morning, and you could see a sell-off. You could see an additional sell-off of those ETFs. We'll have to see if it really impacts Bitcoin. It will, but we could see an additional sell. We could see this price maybe even break a little bit below 90,000 tomorrow morning. So that's kind of an interesting thing. Yeah. Oh boy. All right. Bismarcky down in Cuba, enjoying 27-degree weather. All right. Ian says they are called the Saskatchewan Rough Riders. They are based out of Regina. Okay. All right. Yeah. I mean, Saskatoon's not that far away from Regina. Same province. So I gotta like it. All right. And we got a QQQ. So guys, when I get behind, and that seems to happen more, and that's going to happen more and more as Of course, the channel keeps growing. It gets harder for me to keep up with everything in the chat. So those QQQs, if you've got a question you need me to answer, then put a QQQ. If you're just making a comment, don't put a QQQ on that. Or, or if you're talking to somebody else, don't put a QQQ on it. But if you get a comment or a question that you want me to answer, put a QQQ in front of it. That will definitely get you answered. And of course, if you want to even jump to the front of the line, there's always those super chats as well. Those are always a good way to get your get your answer and to get it now. Because and sometimes I try to keep on top of everything. So all right. Oh, Rory says, oh, wait a minute. Oh, no, Rory, you have to wait. We had a QQQ, and I just went off and explained why we need QQQs, and then I went to skip it. Oh, that would have been terrible. All right. A says, I have thousands of shares in TELUS, which is majority of my account at 22.80. Do you feel it can fall further with rumors regarding high payout ratio? Could it fall to the mid-teens? All right. Now, first of all, let's pull it. Whoops, that's the whiteboard. Let's go over here. Let's pull up TELUS here. Here we go. All right, TELUS. And TELUS, yeah. I mean, TELUS has had a rough time, but I'm going to come up. I'm going to go to the 3-year on this. Actually, let's go further out. Let's go to the 5-year. So you can sort of see since about this height in 2022, early 2022, TELUS has been marching down. And you're going to find all of the telecommunications kind of having a similar thing. I'll give you an example. Let me actually pull up. Let me pull up Bell. BCE. There we go. We're going to pull Bell up, and we'll go to the 3 years on Bell. All right. And just to be fair, we'll duplicate the tab one more time. And we're going to bring up Rogers. There we go. And let's go to the 3-year on Rogers. Here we go. All right. So you can see that we have had, for the most part, movement down. Rogers is the kind of an exception. Rogers has had a little bit of recovery since they broke down here into the 40s. Well, just below the 40s, so the high 30s. So yeah, we've had a little bit. Now you'll notice that we didn't get that recovery on these guys. But yeah, your question is are they going to go down lower? And yeah, they might go a little lower, but I can't see them going that much lower. Because let's just show you something here. If we pull out 10 years, the last time they were this low, other than these couple dips here, really was all the way back here in 2016. So they're pushing against a lot of resistance. And if they go a little bit lower, so if you are wanting to get in on the telecommunications, and this is something I will definitely say, it doesn't matter which one, TELUS, Bell, or Rogers, now's the time to be DCAing. Even if they do go a little lower, fine. You're still dollar cost averaging. Everything that you're buying now, 5 years from now, they're going to be in a completely different spot. So this here is a sector that I think will recover. And I wouldn't say that they're going to recover this year, but I think in 2026, we're probably going to see some recovery within this sector. So yeah, you might be able to get a little bit more, but there's nothing to say. So for example, if you're hoping to get it in the teens, there's nothing saying that you couldn't just, use some limit orders. Maybe let's say you want to buy 500 shares. And it says you've already got thousands, but let's say you wanted to buy another 500. What's to say you couldn't say, okay, well, I'll set a limit order of 250 at, let's say $19.50, and another 250 at $19 in case it comes down. I'll get both spots. That's something you can do, but at the same time, it may not get down there. That's always kind of the other side of the coin, is that it may not get down there. But we'll see what happens. But I do like all three of our telecommunication companies for 2026. And I will tell you right now, I currently don't hold any of them, but that could change, because I do think we're going to see a little bit of recovery. And it's not even, you could argue a lot of different things against all three of them, but they are looking at breaking new ground. They're looking at, diversifying their businesses into more than just the limited telecommunication market network that we have in Canada. Because right now, there's not really a lot of places to grow. But you got Rogers doubling down on sports, and both Bell and Telus have been doubling down on AI data centers. So now, mind you, if you believe AI is a bubble and you believe it's all about to pop and go kablooey, then Bell and Telus may not be in the best position, but Rogers would be fine in that case. Um, I don't think we're going to see a bubble pop. I think, and this is kind of what I've been saying about AI. I don't see it as a bubble, but I think some of the periphery companies are in big trouble. Like all of these little companies that have gotten crazy valuations just because they throw AI in their description or AI in their title. I think a lot of those companies are going to go belly up, or they're just going to be bought. If they have anything worth buying, they could get bought up. But a lot of those companies, those are the ones that I would be like, oh boy, those are dangerous. I would not be touching the periphery. Or if you want any exposure to that periphery, do it through an ETF that holds the big ones as well as the periphery. Then if those peripheral companies start going belly up, you're not going to be in trouble. And I think the big ones are going to be fine. Like your Apple, your Nvidia. Uh, well, OpenAI, you can't trade them, but I think OpenAI will be fine as well on the other side of all of this. So all of that fun. All right. Whew. All right, let's get back to the questions. Rory, this is the Sasky who wants from where? Good afternoon. Waiting for Canoe to go down so I can add. Funny that you mentioned Canoe. So Tuesday's video, we have not looked at Canoe in a while. So, and it's kind of interesting. Canoe used to be like just 3 years ago, 3.5 years ago, Canoe was pretty much the go-to for income investors. But now there's just so much out there. There's so many covered calls. There's covered calls with leverage, covered calls enhanced from in every way, shape, and form. So where does Canoe fit in that landscape? Well, that's a question we're going to answer in Tuesday's video. So we're going to look at that in comparison to that landscape. It's going to be a good one. It's going to be a good one for sure. All right. Relaxing Rains says, holy elongated crypto free fall. Wish I had some substantial money on the side. Yeah, absolutely. Oh boy, that's a big one. That's a big fall. That's a big fall for sure. Ian says, one thing I can't keep myself from doing is reinvesting dividends. I should be growing my cash position. Yeah. MSTE is getting torpedoed. Oh boy. And yeah, with the fall on the weekend of Bitcoin, MSTE is not going to have a good Monday. Those of you who are holding it are going to be like, it's going to be like rubbing salt in the wound. It's not going to feel good. I'm almost at the point that if I was holding it, I would, I don't even know if I'd look at the charts on one day, to be honest. It's not going to be good. All right. Jack says there's almost no buying pressure coming in. Well, no, right now the pressure, it's going to the selling pressure because we got a lot of uncertainty in the market that creates selling pressure. We also have the beginning of the tax loss harvesting season, and that is more pressure to the downside. So it's not going to be great. It's not going to be great. Rory says Charlie Munger always said Bitcoin was like trading poo. The poo index, there's Piglet over there and Owl, Wise Owl, and Tigger. All of them are there on the poo index, but yeah, perhaps. Let's see. My portfolio went from plus 85% in 7 months to plus 3% this week. Yeah, well, I mean, eventually Jack. Your portfolio will be in the red probably when we do go into the next bear market. And, you know, this could, this could be the beginning of the bear market. I don't think it is, but it could be. And that's the reason I say that is that, this is kind of how a bear market does begin. And usually a lot of people, like me, are like in denial as we start to head into the bear market. It's like, no, no, this is just a bear trend within the broader bull market. But here's the reality. The reality is there's a lot of problems in the economy, um, both Canadian and the US. And eventually something has to give. And could the straw that broke the camel's back already have done its job? It could. I will admit, yeah, this could be the beginning of a bear market. I don't think it is, but it could be. Let's just put that out there. So let's let's see what happens. Let's see what happens. Ian says, Jack, holy crap! You must have had a lot of BTC exposure. All right, Pathfinder, what are your thoughts on National Bank at the moment? Well, I like National Bank. I still like National Bank. Now, let's pull up National Bank here. We'll zip on over here, bring up the good old NA. Here we are. All right. So National Bank, we'll pull up the 3-year on them. National Bank has been doing fantastic. I mean, look at this. Their last 3 years have been really, really good. I'm still feeling, still feel good. Like I think National Bank, when they bought Canadian Western Bank, I thought that was a defining moment for them because it really opened up the West for them, and I think that's a good thing, and I think that will certainly help solidify them in the Big Six for the years to come. So yeah, I do like National Bank. I like their direct brokerage as well, but um, I think National Bank is fine, and they did the smart thing as well. With the Canadian Western Bank, they didn't rebrand it. They left that name because that was a good, solid Western name. So I'm glad they left it there. I think they're going to do fine. I think they're going to continue to grow. And out of the Big Six, I think they have that potential to really do some stuff over the next 10 to 15 years, especially with growth. All right, let's see here. Litecoin and oh yeah, Northland Power. Oh gosh, yeah, Northland Power definitely didn't have a good week. Those of you who have not seen, oh boy, let's pull this up here. All right, go away, ad. North here it is right here. It's like da 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 da. Boop. That's a drop. That's a big drop. I mean, look at this. They went from 25 to 18. That was a bad earnings. They had a bad earnings call. So yeah, anybody who was holding Northland Power, and I do like Northland Power, but I'll tell you, the investors right now are not forgiving. We are kind of on that point where, like I mentioned before, there's a lot of uncertainty in the market. Because of that uncertainty, if you have a bad earnings call during a lot of uncertainty, it can amplify the fear and the reaction in investors, and that's I think what part of what we're seeing here with NPI. All right, let's see. At least I still got Google long term, and Berkshire bought it. Pierre has a QQQ for us. All right. Oh, I just saw that Nightbot. Nightbot, go away. I forgot to turn that timer off. Give me a second, guys. Let me turn that. There we go. Nightbot timer turned off. All right. So, all right, here we are. Pierre said, all right, let's see here. So if Bitcoin is tanking this much, is it wise to keep HBTE? Gosh, I am losing a lot on this ETF. Yeah, it makes it, I mean, HBTE, it's designed for the income. I want to put it this way. It's not really designed for the growth. The growth that we're getting is kind of a nice side effect because of the volatility that does exist with Bitcoin. So yeah, it's going to come down. But this volatility will actually help. It'll actually help sustain the dividend which is fantastic. So it depends on what you got into HBTE for. If you just got into it for the income, I wouldn't be super worried. Uh, it'd be almost like a good chance to double down a little bit. Now, right now, and let me just check this out. I have not looked at this since this drop, but it's not going to have the whole drop in here. Yeah, all right. So right now, so with in the challenge, I'm holding HBTE, and this has been my leader for the longest time. But oh boy, yeah, it was at last month. It had a total return of 110,000. That's now dropped down. It's cut in half. It's 53,000. Sorry, 53,000. 53%. So it was 110% last time. 53% this time. Now I do have a pretty low average cost base at 1311. Now, if it continues to fall, this is a good opportunity for me to, I'll probably add. I'm probably going to add because I think I think it's still a really good fund when you're looking at it from the income perspective. And even if Bitcoin stays down for a while, it will go back up. It will go back up, unless we go into a crypto winter, in which case we got a couple of years of cheap Bitcoin, and then it'll go crazy again. And then at that point, we're probably in the next big Bitcoin one, we're probably going to be looking at about 200,000. So that's pretty big. That's pretty big. All right. Pathfinder, what are your thoughts on NA.TO? Well, I just mentioned it. Like I said, I am absolutely I'm a fan of National Bank. I think a National Bank is going to do fine. I think it'll be a solid long-term investment for sure. All right. John says, I saw some info that TELUS could not support the new increase in dividend. I talked to some technician and they don't have boxes in their shelves. They can only fix no new installations for now. Very interesting. Very interesting. Yeah. There could, I mean, I haven't deep dived TELUS in a while. Like it's been about 6 months. They had their moat was big. I thought that they had a lot of room to absorb a lot. But I know I keep hearing this thing with TELUS over and over again. Like, oh no, they can't support it. They can't support it. Well, it could come down to, look what Bell did. Bell did the smart thing. They cut their dividend, and it sucked if you were holding Bell when they cut their dividend, but it was the right move for that company. Will it come down to that with TELUS? It could. It certainly could. But here's the thing. I guess it depends on if we're right. So I think that they're going to recover in 2026. That whole sector. If they can hold out to then, and that sector does recover, they're probably going to be fine. And they could probably maintain their dividend if they wanted to. But I don't think it's a bad idea to cut, but that right now that's probably not where their headset is. So I don't think they're going to do it. Kevin Cat says, "Hey there, gang," and we got some heys back. All right, Michael. Hello, Candace. Any thoughts on the Canadian version of Alphabet? Does it replicate the American one in Canadian funds? All right, let's see here. So the Canadian version of Alphabet, I don't know what you're actually asking me. Which company are you referring to? Let me know, Michael, because I'm not 100% sure. Let me know, and we'll take a look at it. A says, got lucky with Northland Power, sold it at 25 by chance, missing the recent crash. Do you think it will fall further? I won't say it won't, but I also think that it'll stabilize a little bit. You got to remember too, it is in the utility sector. And one of the things about utility is you do tend to have low volatility because a lot of it is regulated. So they've got deals set up with different not companies, but with different, companies that distribute their power. And they're fixed. A lot of them are there's already deals for years. So there's a lot of stability in that sector. So yes, investors had a big reaction. That reaction is over. It'll probably stabilize. And will it climb? It might. It might actually climb. So, um, yeah, we'll leave it at that for now. Silver Bear, new CEO at Berkshire is a Canadian. Greg Abel is from Edmonton. He is. He is. And he was groomed. He was groomed to take that role. So I have a feeling he's going to do absolutely fantastic once Warren officially steps down. I know. I know. All right. Gursky says, I sold my National Bank this week, waiting to get into 60. Yeah. And I'm looking forward. I mean, I think 60 is going to be fantastic. So yeah, Friday, that's when I'm doing the interview. I'm actually interviewing the CEO of Evolve on Friday. So how quickly that'll actually get into a video, I'm hoping. I'd love to have that drop on Friday as the video, but we'll see if I can get a turnaround of that speed. I may not. It may not drop until next week, but we'll see. I honestly don't know. I don't know. But I'm hoping. I'm hoping. Because this is going to be a busy week for sure. Also on Thursday, Adriano is having another one of those pioneers of passive income, and I will be there for that one. So I don't even know how he does it, whether it's live at the time. I'll have to find out. I'll have to find out because that would be cool. That would be cool. Let's see. Jack says 40% dividend cut, first cut in 13 years. Yeah. That was, add that dividend cut to all of the other, to the uncertainty, to the bad earnings. And yeah, absolutely. It was a bad day for NPI, right across the board for sure. Go out 1 year and look at the NPI line. All right, let's do that. Let's go out a year. Here we are. Oh boy. So yeah, if you're looking here, and I don't know if you can see it, guys. I don't know if you can see it, but here is the bottom of this fall. Bang, all the way down here. And you can see this undid everything that they've done since, well, February, since about the middle of February. So yeah, that's a lot of growth, all just gone, all gone for sure. All right. Well, let's see. Will says, I had a GIC come due this month, so I didn't renew it and put it into cash, waiting for the next big dip. Until then, I am looking at the ETF MNY as a safe money market fund while I wait. All right, let's actually take a look at MNY. All right, here we go. Whoa, that's not where I wanted to go. I wanted to go over here. All right, here we go. MNY. All right, so MNY is that purpose. The Purpose Cash Management Fund. There we go. Holy banana bread. And this is a very familiar pattern. When you're looking at these cash ETFs, this is what you see. So they go up and down, and this is each of this down. This is all of the payments. Well, it's not technically the payments. Those are actually the ex-dividend day for the payments. But yeah, this is another good one, and it's got a yield. So you're making a little bit of money, which is fantastic. The big thing with these guys, and this is what I always would say, is when you're putting money into one of these, when you want to do it, you want to do it down in here. So you want to do it on the ex-dividend day, because quite literally, and let me just go to 1 month. There we go. So here's your ex-dividend day, and then it will keep on building until it gets up to here again, but over here, and then bang. So, you don't want to put your money in here, and then if you needed the money, let's say here, then you've lost money. So you don't want to do that. You always want to, I always fill these up at the beginning of their cycle. And that way there, whenever I do take it, I've got my money. If, I got my dividends, if I got dividends, and, a tiny bit of profit, just a tiny bit. So that's how I do it. All right. Amrit says, I guess good time to increase position in Utes. So Utes, since we're in here, this, of course, is the Evolve Utilities Enhanced Yield Index Fund. Here we go. Let's pull it on up. And yeah, and you can see that we've been seeing a little bit of a movement up. But I will tell you with this fund, I'm going to say it. This fund is not designed for growth. It is designed for income. So if you're getting a little bit of growth, fantastic. But if this fund is doing what it's designed to do, it's moving sideways and it's giving you a pretty nice looking dividend. So that's kind of the whole idea behind this one. All right. Amrit says, assuming gold and GLCC would be all right as well. Yeah. So GLCC, gold is set to continue to perform well, especially as the economy starts to whimper. But yeah, so this one here, this is your Global X Gold Producer Equity Covered Call ETF. So it's not a huge dividend. It's like a 6% dividend. But you are getting with this one, and let's just take the last year, you're getting some of that growth as well. So yes, it's using covered calls, but you're still getting a good amount of upside at the same time. Not as much as holding straight up gold, but you're getting that income and you're getting an upside. So not too shabby, not too shabby. We got the question mark, question mark, question mark. So that's your other option. If you don't like Qs, you can do question marks. All right. In your recent what to put in your TFSA 2026 video, what was the reasoning to add eBank? Diversity, it's performing well, unhedged better. One of the things with that video is that I was looking, one of the things, I was looking for ones that we haven't really been covering as much. So I kind of eliminated all of the usual suspects. So that meant I eliminated bank, HDIV, HYDL, all of the big ones. And I was just look at the ones, these are kind of the runner-ups. So yeah, if eBank for me, one, it's a great fund. Let's pull this up. EBNK. All right. Now, yes, with this fund, of course, you're getting that global diversification. So that is a plus. That's one of the pluses that I have with this one. But at the same time, look at this. This is in the last year, it's gone from $11 to $14. Fantastic for a covered call fund. So it's been performing. It's been giving us the total return. It has, in actuality, guys, if you actually plot eBank versus bank, I believe the last time I did it, eBank actually edged out bank on the total return. So yeah, eBank certainly definitely deserved to be there for that reason. Now, the one downside to eBank is because it is European banks, you don't get as much of a volume on it as what you get on bank. For the simple reason it's more of a niche fund. It's kind of like anytime you have an ETF, like a Canadian ETF, that invests in things that are not Canadian per se or American, they tend to be a little bit less popular. Like another good one is HBA. I think that's the ticker, HBA. Yeah, right here. So this here's the Hamilton Australia Equal Bank. And this is another fund. They've been doing fantastic. Here's good old Liberation Day, but yeah, the second half of the year they've been doing really well. The Australian banking system is very similar to the Canadian banking system. They have a lot of the same influence from the Scottish banking system that the Canadian one does. So they're a very resilient banking group as well. But if you ever to look at the volume on this, and let me see here, I know Yahoo shows the volume, but I think I can get a volume here on here as well. Let's just take a look here. Distribution short. Volume. Yeah, here it is over here. Nice and low. This is just the last day. On the last trading day, 2,191. It's a small volume. But once again, something like HBA, though, this is not covered calls. This is just a straight up ETF. So for one like this, how important is the volume really? If it's kind of a niche product, it's not that important. And if you're holding it long term, you're fine. I only get concerned with volume is if I'm swing trading something, I like to have a higher volume, of course. Or if you were day trading something, you definitely volume becomes very important. So just something to keep in mind. All right. Amrit says, I wish I could sell EQ Bank, but the price on it keeps steadily decreasing. Hmm. That's that's a hard one to it's a hard one to look at. Let's actually take a look. EQB. All right, here we go. EQB. They have they've disappointed me. This is not. If you had asked me 6 months ago or a year ago where I thought EQ Bank was going, this is not where I was thinking they were going. But yeah, EQ Bank, let's even go 3 years back. So as you can see, EQ Bank, they had been doing fantastic. Look at this. Higher highs all the way up. But yeah, they have started slipping. But, and here's the big but. And this is not that bad. When you look at the big picture, they're still way up. I don't think they're going to go like right now where they're at. There is a good level of support in this area. So if they do fall through, if they fall through here, your next level of support is basically down around $74. So yeah, I think they're going to be fine. I think they're going to be fine, but it's scary. It is definitely scary. I do think, and initially I didn't think this. I could see a big bank eventually buying them out. So let's something to think about. Something to think about. All right. All right. Let's see here. Oh, and we got a super chat. We got a super chat. Now that means that it's time, guys. It is time to fill up our goat corral with our greatest of all time. I love it. I love it. All right. And I got to read it too. So let's shower some super chats for Candace people. There we go. Yeah, we'll start a trend. Why not? Thank you very much, Pierre. I appreciate that. I appreciate that. All right. Now, where were we? I know where we were. Up here with a QQQ. Claude says, do you think London gold can go much higher in the next 3 to 6 months? Yes, I do. I do. If we continue with this instability and people keep moving into gold, companies like London Gold, Barrick as well, they can continue to keep going up. So when you look now, I think London Gold. Let me just take a look here. I want to eyeball it here for a second. Holy banana bread! I saw the total return on London Gold. So last month in the challenge, I thought it was crazy that HBTE was at 110%. Well, guys, London Gold right now, the total return on the London Gold in the challenge is 121%. 121. So yeah, London Gold is absolutely, oh my God. Like look at them right now. Their market price $113.90. When I bought them in the challenge, $52.24 adjusted cost base. So yeah, that's London Gold has just been crazy, crazy. But it's this economy. It's as things continue to get worse, people will continue to shift into gold, and that is good for companies like London Gold. So can they get higher? Yeah, they can. They can absolutely. And it's funny. Well, heck, 3 to 6 months ago, people were asking me this same question. The same question. And you know what? Let's do it. let's let's pull up London Gold here. All right. And I'm going to pull up the 1 year ago. Here we go. So, back around here. So when London Gold was sitting in the 70s, people were asking me in this week or on the market closes, they were asking me, do you really think London Gold can go any higher? Do you really think gold is going to go anywhere? And I was saying, yes, it will. All indications are yes. And well, now here we are. almost double where we were 6 months ago. So now I'm getting the same questions. Can London gold go up? Yes. Can they go down? Of course. It's the nature of the stock market. Anything can go in either direction. Obviously, if tomorrow all of the volatility disappeared, the market went, everybody was happy in the market and everything was fantastic. There was rainbows and sparkles and everybody was just singing and all of that stuff. London gold would probably retrace because people would start pulling their money out of gold to put back in the market. But if the market persists the way it's going right now, and it looks like this is going to be the case at least for the rest of this year, that's a catalyst for people to be moving money into gold, not taking it out. So that's just something to keep in mind for sure. All right, that deserves a coffee. So good. Actually, I'm going through my coffee really fast today. Ian says, I've been buying a lot of Utes lately. I'm still down a bit. Hard to average down when it stays steady. Yeah, that is true. All right. Amrit says, instead of GLCC, would you think going into actual gold or London gold or any other gold miner be better? If so, which one? Um, did you just, I guess I'm going to say, well, of course you didn't because I hadn't yet answered it. But yeah, I mean, look, this is London gold right now on the screen. So you're going to, if you're talking total return, London gold will absolutely kick GLCC in the butt. No hands, ifs, or buts about it. Well, except for the butt that gets kicked. GLCC cannot touch London gold when we're talking total return. Obviously, with GLCC, though, you are getting income. Fantastic. That's fantastic. It's good to see the income. And that's what covered calls are for, though. They are designed to give you income. They're not designed. Nobody makes covered calls to gain to grow a fund. You don't do that. It's not what they're designed for. So yeah, no, London gold would definitely beat, or even the straight up price of gold would absolutely beat. Yeah, absolutely. Lisa's in the house with a hi, everyone. Rory says, Mary not here. Mary's here. Mary's here. Um, all right. Oh, here we go. Hello, Candace. My alphabet, I meant the Canadian version when you enter that name, or its Google ticker and add to for Toronto. Okay. Are you talking about the CDR? I think you're talking about the CDR. Let's just take a look. GOOG. Whoops. All right. So yeah, we got the CDR here, right here. So this here is yeah, it's a CDR. So it basically certificate of depository receipt. So yeah, it is basically what's happening is these are run by CIBC. They go out and they buy Alphabet. So they buy Google and then they sell smaller shares of Google to you. That's all hedged in Canadian dollars, so you don't have to deal with any of that stuff. So yeah, this is Google. It when push comes to shove, it is Google. So for example, if I want to do a swing trade on Google, I would be doing my swing trade on this right here, on this Alphabet CDR, because, $45. It's a smaller amount. I can buy more of them, which means I can get a bigger impact in that trade, opposed to buying Google. But yeah, make no mistake, this is Google. It's just wrapped up in a Canadian wrapper. And you can almost think of it as a fractional. Each of these is kind of like a fractional share of Google. All right. Mary says that she is watching, of course. All right, here we go. John says, Michael, do you mean the CDR version? All right. Oh, and we've got from Kiev and Cats, we get a super sticker, 279. And here we go. That means, guys, that means we got another goat for the corral. Corral is filling up. The corral is filling up. I love it. I love it. Geez, I wonder if I could someday I've got to have an image of the corral with one goat, two goats, three goats, four goats. Yeah, it'll be like counting sheep, but it'll be goats. It'll work. It'll work for sure. All right. Pathfinder, are you familiar with Mako mining? I believe it'll go up a lot in the next 2 weeks. So Mako mining, I have heard of them. It's probably, actually, you probably had me look at them once before, maybe. There we go. Mako mining, MKO. Let's pull it up here. Um, Speaking of Mako, did you know a Mako shark is the fastest shark in the ocean? Just don't ask me why that popped into my head. I don't know. Is it Shark Week? Maybe. All right. So yeah, let's take a look at this one. Let's pull it back for the year. Mining, mining right now is big, big, big. And of course, as you guys know, the second list of companies to get fast tracked, or projects to get fast tracked, were announced on Thursday, and there were a few mining companies in there. So mining is big, and anything critical mineral wise. Now with Mako here, and let's just pull this up here. As you can see, I just need to highlight one word right there: gold. So yeah, they're in the gold industry. That is going to be fantastic. I think I like gold. I like gold big time. And yeah, they're moving in the same direction as everybody else out there with the gold. A lot of these smaller gold companies, I wouldn't be surprised if some of them get eaten up by the bigger ones, but I I normally am very hesitant. Like when there's a bigger company I can invest in, I know they're going to have a bigger moat. They're going to have better fundamentals. I'm going to feel safer. But we're now at a point in time, at least with gold miners, some of these smaller ones they're actually not a bad choice. They're not a bad choice at all. And I do like this company. And if I remember correctly, I think they have very little debt here. Yeah, right here. 5% debt to equity ratio. That's crazy. And their return on equity, look at this, 35.37%. This is a great little company. Mako. So guys, remember that one. Maybe they're going to be the next Barrick. Who knows? But right now, Mako Mining is doing fantastic for sure. Scratch says golden miners outperform the S&P for some time now. It feels like a topping pattern in tech. I would rather be long in commodities than in tech. Yeah, I think commodities are going to be big for a long time. And you got to look at it this way: even if tech continues to soar, that puts more demand. On the commodities. So let's just keep everything going. That's the way I say it. All right. And before we jump over here to Amrit, we got another super sticker coming in at $2.79 from the wonderful Mary, and that gets us a third goat into our corral. Our corral's getting all goaty, not ghosty. It's not Halloween anymore. All right, perfect. All right, now Amrit said, I guess I should DCA into lug, or is there anything that's a bit cheaper or something that has a little income in there? If you want the income, GLCC is fine. So if you're looking for the income, yeah, GLCC is absolutely fine. That's what it does. You're getting the income. So what was it, 6% dividend, and you're getting that growth as well. You're not getting the full growth, but you're getting a good amount. So GLCC, I think, is fine. Or there's if you look at Mako Mining, you're no dividends, but you'll definitely get some of that growth in there, and that's pretty affordable. If you want to move into something, I kind of like this one. I feel like I should add it. Zamair says, hey, for the US too, I'm new at this. Thanks. What do you want for the US? Just, I'm not 100% sure what you're asking. Let me know, Zamair. Let me know what you want. And I will do what I can here. Let's see. Thank you, Candace and John B. Yes, I was curious about the CDR. And just very quickly, I'm skipping over A, but I'm coming back to you, A. Zamir, I meant tax loss harvesting. Yes, it is for the United States as well. This is a North American phenomenon. Well, it probably happens in Europe as well, but Definitely both Canada and the United States. You will have that tax loss harvesting. In fact, you might even see it more aggressive on the US side because there's a lot more big institutional players than in Canada for sure. All right, back to A. Would betting against natural gas be a good idea right now? Why does natural gas always seem to be high when Trump is in office? That's a good question. I don't know if I would bet against natural gas, but at the same time, not that long ago, we had a quick little moment where natural gas actually fell to the negatives. So, yeah, I wouldn't say that. I would say there's a stability in there. I wouldn't bet one way or the other. I think natural gas long term is going to be huge, but I don't know if I'd bet against it. All right. And just skipping ahead here for a moment, we got a super sticker coming in. Sorry, a super chat coming in from Relaxing Rains, $6. Thank you very much, Relaxing Rains. And before we get to your question, I just got to throw another goat into the pen. There we go. We got another one. I love it. Love it. All right. Now let's get back here to the question. Do you know a great cover call ETF of mining of gold and uranium? Oh boy. Um, so when it comes to gold, GLCC is probably one of the better ones. There is also that gold, the one I did a video on recently, the gold spread one. I think GLCC outperforms that one though. But with uranium, now to get them both together, no, not that I'm aware of. But if you're looking for uranium, there's two ways you can get access to that through covered calls. HHIC, because they are holding the Cameco one, or that Harvest Cameco one, which is a single stock one. And Cameco, let me just pull up Cameco just to sort of show you Cameco. CCO. Here we go. Cameco Corporation. And if we go back to the last year on this one, you can see once again, a pretty big movement to the upside. So this here is, they're based out of Saskatchewan, and they're fantastic. I mean, Saskatchewan uranium is some of the best uranium on the planet. We're not just talking a good uranium, we're talking the best uranium. As we move more and more in, this is going to be a huge company for growth. We're going to see a lot of growth. Now, obviously, the single share income ones, they're looking at that volatility to create the income on it. And there's a good amount of local volatility on here. I wouldn't call this as volatile as like Shopify, but that would be one option. And like I said, if you go with HHIC, you're getting access to gold because I believe they have a Barrick one in that as well. You're getting gold, you're getting uranium. That's that's not a bad one. That's not a bad one at all. All right. Oh boy. All right, now let's get on back here. All right, let's see. Emirates says I feel like Miko could be a decent to swing with. Um, maybe. Other than it's kind of one of these ones where I think it's more or less you just buy it, maybe sell it a week later type thing or 2 weeks later. But yeah, they could be decent. They could be decent. All right. Sprott. Oh yeah, Sprott. They actually hold they're like a uranium trust here. So yeah, or no, this one, oh, here we go. Yeah, Sprott. There we go. Sprott. Oh, no, that's not the one I'm looking for. There is, let me pull this back here. I know there is a Sprott. This is a Sprott physical gold, Sprott physical, here's Sprott physical uranium gold trust. Yeah, Sprott has a whole bunch. There's a Sprott physical uranium trust as well. So Sprott, what they do with all of these different critical minerals, or in this case, glowing minerals, they hold on to the minerals and they give you an option to be able to, because you can't go out and buy uranium. Let's just, you can't hold physical uranium, but Sprott can, and then you can buy, you can basically invest into their trust. So they do have a few. They definitely have a few as well. So that is Sprott. All All right, URA for uranium and USD. Yeah, so URA, let's pull them up here. All right, so URA, there's your Global X Uranium ETF. So this is the US version here. All right, and we'll pull it on up here. Oh, application error. Okay, let's try that one more time. All right, URA. All right, we'll grab, that's because I'm supposed to grab the second one. All right, here we go. Here we go. We got it. We got it. And you can see it's doing the same thing as uranium. So this here is a great option for on the US. So now, mind you, you do get some dividends on here, not a lot. You're looking at a 1.712% yield. So it's not a lot of money, but you're looking at uranium for growth. And with the demand for power only going up as more and more AI gets integrated into society, right now, nuclear is pretty much going to be the only way that we're really going to meet all of these power demands. And that's actually a good thing for Canada and some of their small modular reactors. So those are starting to become very popular. Yeah, the demand for uranium, it's only going to get higher and higher. So definitely something to pay attention to. All right, Michael says, hello again, Candace. I forgot to ask if you enjoyed the bounce and extended care and if you think it will hold. Yes. So, guys, if you haven't seen this yet, let's just take a look here. Extended care had their earnings this week. And let me show you. Let me show you the chart and tell me what you think. Do you think, look at that big jump up. Do you think they had good earnings? Oh, sure they did. Yeah, extended care has done fantastic. And not only did they just jump, they have kept that momentum going up since there because they jumped up to 17. They've put on another $2 since then. Extended care is fantastic. Any business right now that services, well, people in decline or in retirement or even beyond. So in this case here, we're talking senior care homes, and there's going to be, like right now, the baby boomers, most of them have retired, and we're starting to see some of the Gen X getting close. And well, as maybe not when they retire, they're not going straight into homes, but eventually, not everybody, but a lot of our boomers are going to be going into things like long-term care, and that is what something like extended care. There's also Sienna Senior Living. That's another one. So yeah, anybody that caters to those final places in life, whether it be long-term care, whether it be wheelchairs, crutches, things like that, they're going to do well. They're going to do well. And it's a big trend. It's a big trend. And it doesn't matter what the economy does. People can't, people are not going to put on hold aging because the economy's not doing so well. No, it just pushes on. It pushes on. Time is relentless, folks. It's completely relentless. All right. Convos with JJ is in the house. A snowy afternoon. I just know it's cold. I haven't even looked out the window, to be honest. Pathfinder, once again, they have earnings in the next 2 weeks. I'm not sure when, but bet they are already really undervalued and are expanding big time. Oh boy, this makes me want to check. This makes me want to check because I have a feeling they could do well. I have a feeling they could do well. Well, actually, here, let's find it. Let's see. Sometimes they will tell us right here. Sorry, MKO, I think that was the ticker. There we go. Let me take a look and see here. Q3 earnings, November 24th. So no, well, that's not that long. That's not that far away. Yeah. Yeah, that's their announcement date. So it's unconfirmed, but it looks like it's going to be November 24th. All right. As a mayor, almost no mine has just one metal in it, always a mix. Yeah, absolutely. A lot of gold mines have copper as well. So you find gold and copper tend to be a pretty good combination, or silver. So yeah, you usually do get, like, even if it's a gold mine, they usually are producing a few other minerals at the same time. Absolutely. Zumair, I hold URAA leveraged. Oh, let's take a look. URRA. Oops, it's nope, it's URAA. There we go. There we go. Ah, yes. So this here is one of these. So these are, as you guys know, I talked about a little bit about some of those dangerous ETFs that we have here in Canada. Well, they got them in the US as well. And this is one of them. So this one here is the Direxion. I hope I pronounced Direxion right. Direxion Daily Uranium Industry Bull 2X share. So double leverage, so 2X leverage on the price of uranium. And oh boy, let's take a look. You'll see it has followed the price of uranium pretty good. Um, so yeah, you can make a lot of money, but keep in mind when you are dealing with some of these large leveraged ones, most of them will reset the leverage daily. So these are ones you want to get in and out kind of. No, they're not long term. I to me they're not long term holds. All right, and whoops. All right, Patricia's in the house. Hi, listening in. John says ECHI have gold and uranium just for info. Yeah, yeah, absolutely. So that is what is that 9 point ECHI. They are very similar to like Canny and HHIC. So yeah, they will have that exposure as well. What's better, ECHI or HHIC? Great question. And you can throw Canny in there as well. There's the three of them. Now, I did look at them in a video earlier. Um, and I thought that they each of them had their strong points in one area or another. So I will say, depending on your needs, anyone could be the better one. What I'd be interested in doing, though, is looking at them again a year after they're out. And then we've got some data to work with. Because right now we don't have a lot of data. They're all very new. Like they were all released towards the end of the summer. So we don't have a lot of data yet, but it'll be interesting to look at them once we get about a year of data. All right. John says almost the same holdings, but few differences. All depend on what you like. There you go. Exactly. Zamir, I would advise anyone to be careful about the whole nuclear thing. It's a very expensive way to generate power and takes years. It could be just hype. Um, Traditional nuclear, yeah, it takes a lot of time. That's one of the advantages. So one of the things they've been doing up here in Canada, what is it, where they do the CANDU reactors and such, they've been working on these newer reactors. They're small. They're called SMRs, small modular reactors. They can be built a lot faster and they're mobile. So for example, if you could take one to where you need it, and if needs change, you could move it. Now, normally with the bigger ones, it's not such an easy job to move a nuclear reactor. But that's kind of the whole idea behind that Zumair is they're looking at making them faster, making them more agile overall. So, and I'm not an expert on nuclear power by any means, but everything that I have researched makes me pretty excited about these SMRs. So take a look at that. Maybe that'll change your mind, or maybe it won't. Maybe it won't, and that's fine. I know the old ones. Yeah, they're a lot harder to move for sure. Or they're also a lot harder to build. Let's see, Jay. I swear I was conditioned to believe anything coming from Saskatchewan is stringing a banjo, and anything but mining. Okay, fair enough. Zumair says the small modular reactors are experimental. I think only 2 prototype exist, even more expensive and just as long to deploy. Hopefully Trump won't cut safety for speed. All right, well, we'll see. We'll see. My understanding is that they are faster. That's my understanding. That's kind of what the information that at least the news has fed to us up here in Canada. But I'm not an expert, so I'm not, uh, the news can sometimes be wrong. I guess in the U.S. you call it, what do you call it? Fake news, or misleading news, or just we didn't do enough research news. There's always that too, but we'll find out. We'll find out. I mean, because there is money going into that with that first round of projects. A says, do you think Northwest Health can keep their jump from 5 to 5.7 last week? Um, let's take a look. Let's take a look. We haven't been over to Northwest Health in a long time. NWH. Not there we go. Northwest Health. All right. So this here is, well, they are a REIT. I mean, I like REITs. I do like REITs. But here's the thing, they have been moving. Like they've been moving in this typical direction. Now, if you were to actually plot an average amount of their moving, this here was a kind of an overreaction. So yeah, they're going to lose some of that. Like I think they will steady right now at 539, about halfway down. I think they'll steady out and they'll eventually move higher. Like if they continue the trend that we're seeing right now. Um, and I do like this REIT, and I think as we get more and more, as we look to expand more and more into healthcare, that could overall be good for this REIT. So I think they're going to be fine. I think they're going to be fine. All right, now let's see here. Thank you. And see, scratch, solar, and wind are the cheapest, regardless of environmental concerns. Uh, Direction is pronounced as direction, by the way. Oh, really? Is it direction? All right. I like direction better, but direction. All right, fine, JJ. Fine. Jake says, "Hey, Candace, just found your channel this week and really appreciate your knowledge and the way you explain things in regular words for us newbies." Well, that's what I'm here for. That's what I'm here for. And welcome to the channel. And you found the live stream too. So, uh, kudos on both of those. Scratch says, those energies are not reliable and will get squeezed by the mineral and energy demand. Works fine with cheap oil, not in a inflationary environment. Um, yeah, and here's the thing though. I mean, even with all the green technologies, we're a long way away from losing our dependence on oil. It's going to be the back of our energy for a long time, still a long time. So yeah, and that's why I've been bullish on oil for a long time as well. Zamer. My first name is Ophir, which means gold. There is a gold mining town in Colorado named Ophir. Did my value go up? uh, yeah, that did it for sure. Um, I I'm not sure which market your chart's on, Ophir, but yeah, for sure. No, I mean, that's nothing wrong with a golden name. Nothing wrong with that at all. Let's see. Combos with JJ. HHIC better for non-registered, lower payout, more growth focus. Canny Ichi better for any regular account, higher yield focus. In my opinion, most of the holdings are within pretty much fluid. Yeah, it's kind of interesting. I mean, that's what the thing is, and I think that was the conclusion. I do have a video on the three of them, and the conclusion was pretty much that depending on what you're trying to get, like whether one of them has better diversification, one of them has more constant payouts, one of them, I just has, in my opinion, has a nice, good, solid Canadian mix. But it's fine. It's fine. All right. Let's see. JJ goes on to say, wait a minute. No, I read that one. Here we go. Though HHIC harvest is usually focused more on price appreciation than yield payout. All right. And Ophir, says mobile nuclear sounds absolutely horrifying. I'm kidding, of course. Thank you for answering my questions. Well, here's the thing, though. If you think about it, and this here, once again, not a nuclear expert, so I don't know how. When they say they're mobile, that doesn't tell me how much headroom they need to be able to move them. I mean, something could be mobile, but it takes 6 months to move it. That to me is not. To me, I wouldn't even consider that to be that mobile. Because what I was thinking is that, if you had nuclear power in a place where, let's say you have a 6-hour notice that a tsunami's coming, can you move this in 6 hours? That's a lot different than if it takes 6 months. It's not going to help you. So yeah, it's kind of an interesting thing. Now, yes, I mean the mobile part. If you don't need power in village A anymore and you want to move to village B, sure, great. But yeah, but at the same time, I mean, honestly, if you're sitting on a place that's prone to tsunamis, you probably shouldn't be building a nuclear reactor there, mobile or not. Just saying. Um, or like probably the West Coast where we got earthquakes. You probably shouldn't be building nuclear reactors there. Or you could build them inland and bring the power to the coast. At least get them away from major fault lines. Don't build one on the side of a volcano. To me, that's all common sense, but common sense isn't always the everyday sense, it seems. All right, Brian is in the house with a good afternoon. Sorry, 2010. All right, BMO reinvest distributions are coming up again. Did you check out the new podcast released yesterday? I did not. I did not yet. I have not had a chance to. But I will. I'll try to get that done. I don't know if I'll get it done today, but I'll get it done. I'll try to get it done this week for sure. All right. For certain ETFs, Jack says, no, a nuclear power plant on the edge of a volcano sounds sick. Yeah. It sort of it gives you a radioactive eruption. I don't know if I would want that, but it's sometimes you have to do you, I guess, but that's fine. That's fine. All right. Oh boy, guys. Oh, this is fun. I'm glad I have coffee. Very good coffee, as I mentioned before. All right. And I think it's because there's pumpkin spice in it. Nothing else, because sometimes you guys come up with other ideas, but it's just pumpkin spice. A says, how will fall in house markets affect banks, REITs, and insurance sector? All right. So, yeah, I mean, the housing market has been inflated for the longest time. So, obviously, when it comes down, yeah, there's going to certainly be impacts across the board. Here's the thing, though. I don't think it's going to come down fast. We're not looking at like a big retraction in house pricing anytime soon. I think it's going to be more of a gradual thing. So, with it being a gradual thing, how will it affect things? I don't think it's going to have a big impact one way or the other. Where it helps REITs, obviously, is if they want to expand. Housing prices, if they're coming down, that does make it more affordable to finance and buy more properties. That's what REITs do. So, yeah, it's not a bad thing for a REIT for sure. Insurance, I don't think insurance would be impacted by it really that much at all. Other than, yeah, you may have more people buying houses. And if you buy a house, what do? You get fire insurance, you get um, probably maybe flood insurance, depending on where you are. But yeah, insurance becomes that could actually be a plus for an insurance company if there's more people buying housing. Obviously, too, when the price of housings come down and people start buying them, it might mean there's less on the market, which could, of course, help us look at building more. And we already know we need to build more. We need to build a lot more, to be honest. Now, banks will be fine either way. They've kind of got things all, once again, I mean, actually, banks could pick up more business if there's more mortgages, if people are buying some of these houses. So, yeah, that's because a lot of times people who are selling the houses, they may already own the houses outright, so they may not even be in mortgage type situations. So that new person is going to go into a mortgage, which means revenue for a bank, one bank or another. So yeah, I would say that's fine, but I don't think it's going to happen fast. I think it's going to be a slow process, and in some cities, like some of the bigger cities, like Toronto and Vancouver, I imagine it'll be an even slower process. And in some places, we could even see the opposite happening. Like there are places in the country where prices are already really low. Think Quebec, think Saskatchewan. Maybe in those areas they're not going to really fall at all. Maybe they might actually come up a tiny bit. So just something to think about. Uh, Wherever there are three-eyed fish, you can build it. There we go. The good old three-eyed fish. I've never seen a three-eyed fish, actually, to be honest. Ian says mobile nuclear means it can be constructed at a central location and transported by truck to location, lowering the cost of manufacturing, or at least that's what I heard. Okay, fair enough. So maybe that's might be what they're talking about by mobile, that it can be built, and then maybe it's no longer mobile once it's installed. I don't know. This is the thing. This I do not know. This is something that I need to do more research on these SMRs, I think. Um, let's see. Brian says, I saw your video posted, JJ, but I didn't have time to watch it because of how long it was. I tend not to watch anything over 20 to 25 minutes unless it's a live stream. Okay, fair enough. Fair enough. There you go, JJ. You got to make a Cole's Note version of your videos, JJ. So have the long one, and then for people who are busy, have a Cole's Note version too. Why not? Rory says Russians have mobile nukes. Seems to work. Those are slightly different, Rory. Slightly different. Actually, I think the mobile nukes that Russia has, I think most of those mobile ones, correct me if I'm wrong, but I think most of them are tactical. So, as in, they're not big nukes. They have smaller yields, but they're still nukes. All right. Brian, let's see. I cut my cable years ago because I don't have the patience to sit and watch TV for an hour. Fair enough. And plus, I mean, why pay? Why pay? Nowadays, you can get everything you want on YouTube. You really can. John says, JJ, I saw it yesterday with Paul and his friend. That was good. Lord Fubar, maybe you can use Tesla FSD to transport it. That will make it safe. Put it in a Cybertruck. We'll just strap a nuke to the back of a Cybertruck. Oh boy. Oh dear. That would be funny though. That would definitely be funny. What can I say? Watching and typing in 2 streams at the moment. Okay. Fair enough. Ophir says, I heard that just the payroll cost on security makes nuclear expensive, mobile small, big, whatever. Okay. Yeah. Well, yeah. I mean, obviously, last thing you want is terrorists coming into your nuclear plant and heading off with a bunch of nuclear material. Now, mind you, guys, just if a terrorist ever stole nuclear material from a plant, it's not like you're looking at a nuclear explosion. They can build a dirty bomb with that. That's all they can really do with it. And all that means is that you want an explosive that disperses the radioactive material. And, maybe some people in a couple of city block radius and downwind of it would have a very bad day. But hopefully that never happens. Hopefully. But you never know. That would be the most, if there's ever going to be a terrorist event that's nuclear, that's probably what it would be. I doubt. I don't want to say I doubt. I never doubt anything anymore. Leon's says, hi guys, hope you are having an awesome day. Good to see you, Leon. All right. And JJ said the next video will be shorter. Let's see. Actually, I'll just make 20 to 30-minute clips of the podcast for the most useful parts and repost them. There you go. Russian nukes are cardboard cutouts. That's kind of funny. It's like, yeah, we can't afford nukes. Let's just make print pictures of them and make sure the spy satellites see them. Why not? That's actually kind of ingenious if it works. Ofer says, I think this discussion warrants a whole show on nuclear-related investing. Yes, maybe. Brian says, JJ, I understand that you can cover a lot more detail in the longer videos. It's just me. If you get the views, no worries. Maybe take notes on how shorter videos get compared to longer videos. Or, here's the thing. Maybe your shorter video can be the gateway to the longer ones, Hook them on the short ones, and then when they can't get enough, you throw the long ones at them. Just saying. Paul says, good afternoon. We just got back from the new Costco Business Center in New Westminster, BC. Too many people. I bet. Did you at least get some good deals? That's all I want to hear about. Let's see. Dirty bomb in a dirty city. Winnipeg. Oh, Rory. Rory, you're never allowed to be a terrorist because Winnipeg would never. Oh, all right. A says health sector has improved in the past month. REITs are mixed or flat. Harvest healthcare leaders and global REITs ETF. Yeah. Yeah. Give it time. Give it time. I mean, healthcare. Oh, healthcare has had such a hard time in the last year, but things are starting to look at least a little better. So give them a bit of time for sure. Scratch says Russia have a uranium plant on a boat to bring energy in remote areas in the Arctic Sea, I think. Oh, well, that's kind of cool, actually. It's a it's a floatable mobile. I like it. Floatable nuclear power. Why not? Paul says we bought a few things: 2 kilograms of beef torrentellini, some pasta, and a few other things. Okay. Cool. Yeah, I have not been in a Costco. I actually the last time I think I've been inside a Costco was probably been about 5 years. So, yeah, that's definitely a long time. All right, a black crayon 12. Is there 12 different black crayons? Yeah, there might be. There might be. There's a lot of crayons out there nowadays. Any thoughts on HHIS? I love HHIS. It is, of course, Harvest pulling all of those single shares together. Now, right now, it is going to be down. Absolutely, because tech has been having a little bit of a rough time. So it is heavy. So HHIS is heavy on tech. So as you know, it's got all the big tech names in there. It's got a few things outside of tech, like it's got Eli Lilly, for example. Um, but yeah, it's a fantastic ETF. I think it's going to be a great income addition for most portfolios. But you got to be wary. I don't want to say wary in that sense. You got to just be aware. You got to be aware that when tech starts to falter or when the Nasdaq starts going down, you're going to feel it on HHIS for sure. And when we look at the Nasdaq, well, let's just take a look at the last week of the Nasdaq here. Here we go. Whoops, right here. There's the Nasdaq. Yeah, it's down. Like here is this blue line represents where the Nasdaq left last month, and you can see right now, yeah, it is it's down a little ways. It is down a little ways. So HHIS should be down, and well, let's take a look. Let's take a look and see how bad it is. Could be a good entry point though, perhaps. All right, let's just pull. I'm just gonna pull up the last month here. Um, it's actually not as bad as I was expecting. So yeah, 13.7. It's down about what, 60 cents. So that's not too bad. All right. Paul, Gary Gill has a video about his MSTE. He is down. I saw that. Oh boy. Yeah. Rory says 97K now. Poor Gary. Oh boy. Tanya 73 says, JJ, your video was great. Lots of great content. You really understand a lot of aspects of the market and can convey it well. There you go. Look this out, Candace. Pretty cool. What the heck is that? Adam, oh boy. All right. I'll put this in here. Let's see here. AKAD. Nope. That's Akamante Technologies. EMIK, Atomic, Lomon, LOMON. All right. OSOV. I have no idea what this is, but you know what? Let's take it. Oh boy. I'm going to take this to Google. I don't know if I should. All right. You know what, guys? Just give me 1 second. I'm going to go big as I pull this up, just in case it's not appropriate. Okay, never mind. It is. All right. I was just like, wait a minute. What are you sending me to? Yeah, I trust Scratch anyway. But yeah, here it is. So this is the world's first floating nuclear power plant. Oh, this is cool. Here it is right here. This little boat over here. It looks like a ferry. It's probably not a ferry you want to take, but it kind of looks a little bit like a ferry. That's kind of cool. There we go, guys. There is our floating nuclear cogeneration plant. I love it. I love it. Can you explain NAV, please? So, okay, NAV, it stands for net asset value. It's basically how much it's worth. So if you look at a stock and you hear the word market cap, so market cap will tell you how much that stock is worth. NAV is basically an ETF's version. Now there are some stocks that have NAV. Canoe EIT, because it's an income fund. They do have an NAV. So the net asset value. Now, net asset value actually goes further back. Before ETFs, net asset value used to be used with mutual funds. And that was used to be what mutual funds was traded at. So back in the olden days, with mutual funds, you could only buy them once a day. Usually it was at the close of the market. And that would be when the NAV was set. And you would buy. So even if you bought it earlier in the day, and if that asset was doing really great and it was up, or it was down and you were buying it low, if it went up by the end of the day and the NAV ended up higher, you ended up paying the higher price because they only sold once a day. So normal ETFs now, they still have that NAV, and that NAV is set once a day, just like back in the day of the mutual funds. But then they also have a price, and that price, of course, moves through the day, and that's you're no longer paying by the NAV. It's more now or less the NAV is more or less a measuring stick, so you can sort of see where the price is fluctuating in comparison to that NAV, which can be kind of an indication of how well a fund is doing. So yeah, that's all. But basically, that's it. Net asset value, or you could call it. If you ever hear of AUM, assets under management, um, that that's kind of tied to NAV. It's not exactly NAV, but NAV gets calculated out of that. So hopefully that makes sense. Lord Fubar, why don't they sell cash secured puts with the covered call strategy? Um, Give them time. Give them time. It seems to me that as this whole I don't want to call it an income wave, but as income investing gets more and more popular, and these management companies, they are looking for more and more ways to make some money. So yeah, now one of the interesting things, Canoe EIT. So not an ETF, but they are an income fund. Because they're a closed-ended fund, they can actually do a lot. Like they don't tell you exactly what they're doing, but a lot of you might actually be surprised to know that sometimes Canoe can actually use covered calls if they need to. They do use a little bit of leverage. There's other different strategies that they can certainly use. Um, would they use a cash secured put? I don't know if they ever have or not, but um, I would not be surprised if we start seeing more and more complex as they're competing with each other, and they're all trying to find ways to make even more cash. It could be very interesting. All right. Ofer says, in my opinion, do funds like HHIC make sense as a diversifier from U.S. stocks, or does one drag the other along? Well, HHIC, obviously that one is the Canadian one, so that is looking at all of the Canadian stocks. So it's kind of like that Canadian version of HHIS, because HHIS, that is all it's all big American stocks, mostly tech. So HHIC is just that Canadian component to it. So, is it a diversifier from US stocks? Perhaps. I mean, it never hurts to diversify your portfolio on an international stage. If I was American, so if I was, we're doing this show out of Gainesville, Florida, and I got my Gator stuff up on the wall and all of that fun stuff. Obviously, yeah, most of my stuff would be in US stocks, but I probably would look at diversifying a little bit into international. So probably a little bit of Canada, maybe a bit of Australia, maybe some emerging markets, maybe a little bit of Europe. But I would say in that case, I probably would have about, I would say 80 to 85%, maybe even 90 of my portfolio would definitely be in American things for sure. So just something to keep going. I see something I don't like. John says lost connection. I hope not. I hope I'm still I hope I'm still broadcasting. I hope I'm still broadcasting. I looked over at the test machine and I'm still there. So, all right. I think I'm fine. Let's see. I think it's a person, not a stock. Oh, the that thing, yeah. What are your thoughts on the oil market? So oil, oh boy. And here, let's bring up our good old friend here, WTI. Now, oil had a little bit of an up here on Friday. Sorry, or sorry, not that's not even Friday. Oil is one of those ones that does trade. All right, here we go. I'm just collapsing this a little bit here, guys, so we can whoops. So we can just see a little bit more of what's been going on with oil. So oil has been on this downward trend for a while. A lot of it, well, OPEC has a lot to do with it. OPEC has been, well, they've been boosting production. So OPEC is basically saying that they feel that the surplus of oil is more of an illusion, kind of like it's not real, that there's actually a bigger demand than we think. And that's what they've been using as a justification. Obviously, well, obviously, I won't say they're wrong, but the charts kind of say they might be because that increase has been seeing a steady decrease in the price of oil. And I mean, look, we're coming back and back. All right, well, yeah, it gets a little crazy back here, but for a while, oil has been heading back down. We are heading into winter. That will certainly help oil. It will create more of a demand, of course, because of heating, home heating, all of that fun stuff. Now, what type of winter are we going to have? If we were to have, let's say Europe has a cruel winter, a really bad one, that would be good for oil, or North America. And right now, it sounds early estimates are that we're going to have a pretty bad, or at least a colder than normal winter. So we'll see. We'll have to see. But yeah, I think oil right now, I think 2026 will be a better year. 2025, not the best year for oil. I'm at that point right now where if you like oil, like I do, this is not a bad time to be dollar cost averaging into some oil exposure. And, I use, for example, XEG. So let me show you that one here. All right. So XEG, this is the iShares Capped Energy Index right here. And I'm going to come back here to 3 years. And you can see, actually, the 3 years doesn't look that bad. Let's go to yeah, it actually doesn't look that bad. But here's kind of, this here is that slide that oil's been having. But oil has been improving a little bit recently. This one is a good little ETF. They do tend to do really, really well when oil is doing well. They tend to be very reflective of the overall oil market. It doesn't have, I'll warn you, this is a growth ETF. It has, like, quite literally, its yield is 3.545% quarterly. So it's not really, it's not for income. This is purely growth. But this here is my oil exposure. Now, if you are looking for income, obviously, there's things like ENCL. So this here is the Global X Enhanced Canadian Oil and Gas Equity Covered Call ETF. And, this one here, and this here, by the way, because of the CL, there's also ENCC. The L is the one with leverage. So the ENCC, if you don't like the leverage, ENCC. If you like the leverage, ENCL. And as you can see, this one's been mostly moving sideways right now. It will move up a little bit once oil starts going up, but it's got covered calls on it. So there is some capped potential on the upside. But you're getting, look at this, it's paying out 16.746%. So this is a income. This is, you're not even here for the growth, honestly. But if the growth happens because oil finally rebounds, yay, fantastic. But just keep in mind, it is, it's for the growth. It's for the growth for sure. All right, let me see here. All right. Paul says, my blocks ETF is down 26% in price, but with distributions actually down 12% per Snowball Analytics since Bitcoin ETH has been going down. All right. Interesting. Okay. Yeah, and blocks is, yeah. So blocks is a lot like HBTE, and that one is down big time as well. So what can I say? What can I say? Hopefully we get a little bit of recovery. Hopefully we get a little bit of recovery. All right, now. Ofer says, I take everything back. Floating mobile nuclear plant is just too cool. It is pretty darn cool. HBTB would be down similarly. Yeah, it will. Absolutely. All right. Now, before I get to Reverend Ramirez, I just want to quickly jump ahead. Black Crayon has joined the banana. What are we calling it? The banana bread crew? Well, we need a better name. We need a hipper name. We'll figure it out. But welcome to the channel membership. So, being a channel member means you get to watch videos one day before the non-members. You also get a live stream every month. You just missed the last one. We did it Thursday, and the last video of the month. Everybody, basically the community comes up with 4 ideas, and then you guys get to choose. You guys get to vote on which idea gets turned into a video. So that's always fun. Plus, you also get some of my my swing trade updates that goes out through the community tab, and that way there you can see what I am swinging during the week, which is always fun. Always fun to see what I'm winning, see what I'm losing, all of that fun stuff. All right. Well, anyway, welcome to the team. Reverend Ramirez says, I recently added a speculative position CDR for I Louis Vuitton, ticker LV, and it's up 13%. There are so many CDRs now, I was shocked. Yes, so it used to just be CIBC, but now there's another bank. Is it, I don't know if it's, no, it's not. Is it RBC? I think it might be RBC. I can't, guys, correct me, please, because I know I'm probably wrong. But there is another bank that has started doing CDRs, and they're mostly European and Asian CDRs. So, yeah, there's a lot to choose from out there. And I love it because otherwise, you know, how are you going to get exposure to these markets if your broker doesn't provide you? And even then, if it did, I mean, do you want to have to deal with all of the currency conversions and everything? CDRs are fantastic for that, for sure. I like it. Paul, Blocks ETF added BLSH, Bull, BITF, amid last week. Oh, interesting. Interesting move. Cowboys in the house with a greetings all. Brian says, I thought Blocks might get the reverse split as well, but it didn't. HBTE shares had been an interesting this. Oh my God. Yeah. Yeah. Well, with Bitcoin's big drop, yeah. And it's going to continue to be interesting. The beginning of this week, I think, will be interesting as well. Block still 1938 USD. Before the Bitcoin dump, it was around $26. All right. Pathfinder, my idea was NAV is the sum of all assets that have a set value to them. For example, if a holding company was 3 companies and 50-50-50, the holding company's NAV would be 150, even though it has MC. Yeah, I mean, that's the thing. It's the net asset value. So it's how much that company is worth. So yeah, that's pretty accurate. That's pretty accurate. Watching oil and utilities for buying opportunities. Nice. MSTY hug on as well, not to get a reverse split, and it's down to $7.99. Yikes. Scratch says OPEC always increases production when they know demand is on the corner. Yeah, that makes sense. I mean, yeah, it's like if you know that demand's going to spike, why wouldn't you make sure you've got a lot of product in the market for it? Yeah, no, I agree. Let's see, but less and less people use oil for heating now. You'd be surprised how many, especially when you look at Europe. Oh boy. And it's not even just, it's also, keep in mind, we're talking oil. We're also talking natural gas. It's pretty big. It's pretty big. And Scratch says oil is in everything. Yeah, anything that you have that's plastic, there's a certain amount of oil in that. Yield max are going 10-1 on reverse splits. Oh, interesting. Interesting. I still don't like yield max, but interesting. QQQ reverse split. And let's see. Ian says, I'm heavy into ENCL. Just got back into the green. Ofer says, the only way for covered call funds to keep up with the underlying in a bull market is to either ODTE, or at least 20% leverage, CTSPY and Round Hill with funds. Yeah, so we do like a couple like the Daymax ones. Those are ODTE. So basically, a 0 days to expire. In case you don't know what that stands for, guys. Yeah, absolutely, and it's kind of one of those interesting things. Yeah. Ian says banana bread heads, and then banana bread bangers. Oh, do you swing trades in the TFSA? No, 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 no. So yeah, so well, let me be clear. I said no, but I have one. So in the 0 to 100K TFSA challenge, I have one swing trade, but it's a long term swing trade. It's that Air Canada one. So, it's a trade that, may happen in a month, may happen in 2 months, 3 months. I don't know. It's going to be a long trade, but yeah, you don't want to do regular swing trades. If you make the occasional swing trade, as long as it's more than 30 days, you're fine. You're fine. Just don't do it a lot. Ideally, if you want to do swing trading on any kind of a frequency, you want to be outside of your TFSA. You can do it in you can do it in your RRSP. They don't care. You can do it as much. You can day trade in your RRSP and you're fine. But don't do it in your TFSA, guys. You'll get in trouble. And when I say get in trouble, basically the CRA will look at you and say, "Oh, you're doing business income in your TFSA. Well, it's no longer tax free for whatever period they deem that you've been doing business trading in your TFSA." And the worst case is, even if you were just swing trading with a couple of things and a few trades you made during the time were legit normal trades, they'll tax you on all of it. They're not going to break it. They're not going to single it out. They'll just get you on everything. So don't do it. Don't do it. Scratch. I'm even more on the banana bread belly, but don't tell anyone. Banana bread belly. Okay. Prairie says I'm still partial to the BBB, Banana Bread Brigade. Ah, I do like that one. That is kind of interesting. And I do like I like repetitive numbers, so letters in this case. Although you could look at it from the corner of your eye and it might look like an 888, but that's fine. Randy's got core. That's a good one. All right. Paul says, I dare someone to buy the MSTR CDR. Maybe it will turn around. The institutions are still buying Bitcoin and Ethereum while retail is selling. Yeah. Oh, yeah. No, the institutions are going to buy it up while it's slow because, on the other side of the sphere, Bitcoin tends to rebound. People start buying it again. And if these guys have already bought it low, the other people who are buying back in are going to be buying high, of course. Cowboy says diesel heating is big in the east and far north. Yeah, I can understand that. Correct me if I'm wrong, Cowboy, but isn't diesel more stable in very cold temperatures? Pathfinder, from what I understand, natural gas will rise quick, but oil will go up also due to power demand. We want more cowbell. I got a bell here. It's not a cowbell, but I got a bell. Let's see. The best performing fund, in my opinion, is WNTR of the Yield Max Inverse MSTR fund. Not kidding. I feel bad for the retire on MSTY. Funny thing is, Ofer, when you said WNTR, I just saw winter. I saw winter. But yeah. All right. Pathfinder, coal went up huge since my buddy Mohanish bought it. Okay. Why not? Let's see. When did QQQ announce reverse split? That doesn't sound correct. I don't know. It might tell us over here. Let's just go to QQQ. All right, let's pull it up here and see if we have any kind of news. Sometimes it'll give us a little bit of news in here. Let's see. Annual changes. Invesco announces changes to risk rating. Invesco Canada announces changes. Yeah, so I'm not getting anything here, but all is not lost. This is going to be more accurate, especially for a U.S. stock. All right, here we go. Invesco. Let's pull up Invesco and see what we got here. All right, now let's come into here and see if we got anything here under their news. Let's see. QQ takes October data may never be known. More events. I'm just pulling up more news to see if there's anything in there. I'm not seeing anything, at least recently, in here about any kind of a reverse split, but doesn't mean it's not there. It just means that it's not showing up in the news right now. Normally, that would be kind of one of those big news events. Yeah, I'm not seeing anything. I'm not seeing anything. So maybe, Michael, maybe you're right. Maybe you're right here. Rory says Kyle Livingstone's latest video again mocked the bad cover call ETFs, which are, in my opinion, dangerously risky. Yeah, there's a lot of really bad covered call ETFs out there as well. One of my big rules, guys, is that when I'm looking at an income ETF covered caller, or even if it's a split core, I don't care what it is. If we're in a bull market and it's not going up with the asset, then there's something wrong with that covered call ETF. So it has to be making money in a bull market. That to me is a bare minimum just for me to even look at it. But there are ones out there. Like I said, some of the ones, like I did 2 videos on 2 different companies, and they're a lot of their leveraged ones. Those ones you can make a lot of money off of them, but they're really, really dangerous if you don't know what you're doing. So that's kind of the whole point behind those. Cowboy, the biggest export from BC last year was coal. So much for being green, and most of the coal was dug in Alberta. Interesting. All right. Coal trains are running through Jasper right now. Blue River. Prairie says, I was vacationing in the Maritimes a few summers ago. I was surprised by how many service stations had dispensing pumps for heating oil. Um, yeah. I know my mom and their old house. They had an oil furnace. They used to actually go to one of the gas stations, and there was exactly that, a dispensary pump there for heating oil. You fill it up, you go in, you pay for it. What is a reverse split? It's like a regular split, but backwards. So, for example, if a company, let's say a company has is worth $100 and they do a split, a 2-to-1 split, then they would have twice as many shares, but they'd be worth $50. Well, if they did a reverse split 2-to-1 instead of it, it would basically be that $100 shares, they'd now be worth 200, but there'd be half as many shares. So if you had 2 shares, you'd wake up tomorrow owning 1 share because every 2 shares would become 1. So yeah, it's a reverse split. Why would a company do it? Some smaller companies will do it if they're on an exchange that has a minimum share price to be on that exchange. So sometimes they might do a reverse split to get their share price back where it needs to be to stay on the exchange. That's one reason that they might do it. Scratch, take a look on the Permian Basin in the US, guys. It is peaking. The best tiers wells show a slowdown. Yeah, the Permian Basin is huge. Definitely, it's kind of it's a huge oil reservoir for sure. Canadian oil is the future with sagged. I heard the US is also running into water issues in their fracking wells. Um, maybe. Well, I mean, yeah, there might be. I mean, there might be some issues if if you don't have enough water. So, if you've got a drought in an area and you're pumping a bunch of water, because you have to pump water. The way fracking works is basically, you put your mine in, you basically pump a whole bunch of water into layers between shale, and it pulls out all of the oil with it. That's one of the reasons that they get most of the oil that they're pulling out of the ground in the States because of fracking. It comes out as light crude because of that water content. Whereas a lot of the oil that we have up here is heavy crude. So, a little bit of a difference. Vineet is in the house with a hello. Hello there, Vineet. Rory says Eric Nuttall talks about U.S. oil and its twilight. Zamair, Ofer says, any split funds you can recommend? Strangely, this is a purely Canadian thing as far as I can tell. Yeah, split funds originated in Canada. I have not heard of any other country doing them yet. I wouldn't be surprised if one of them eventually does. Quite literally, my favorite ones, my 2 favorite ones, ENS. So ENS, they invest in basically Enbridge. Also, BK, which is a bank one. I think both of those are pretty darn good. So, part of the structure of split core is that they have NAV thresholds they have to hit. If they don't hit them, then they will suspend the dividend that month. Now, during the pandemic and the aggressive rate hiking that followed, a lot of the split cores were suspending. We're not hitting the threshold. So you saw a lot of suspension. But with something like, for example, BK, I think BK suspended their dividend once, and that was April of 2020. So the very first month right after the pandemic was declared, but they were fine. They were fine. They hit their threshold all the time. ENS, similar to very good split cores. All right. Pathfinder, ALV and HME will be the small cap winners. Yes, and I know we've looked at these guys before. Well, let's look at ALV one more time here. I know we've looked at them before. Where are we at? Oh, we're on Zoom Technologies over on Yahoo. Here we are. This is the one I'm looking for. ALV. There we go. Alvo Petro right here. All right, now Alvo Petro coming in at $6.10. They've been having not that bad of a year, actually. Now, this one is kind of fun because it has a pretty big dividend. So it is a quarterly dividend, but it's a yield of 9%. So that's not too shabby. So I've liked Alvo Petro. Now, I will point out, it's funny, I was holding Alvo Petro. I believe I had them in the challenge early, and I sold them up in here. I had a feeling that it was gonna retrace, that the sector was gonna retrace, and so I got out up here on this one, which was good timing, definitely good timing because it had quite the fall. But this is a good. I like this company. I like Alvo Petro. It is a company though that I would not be surprised if they get eaten up by another company, but that tends to be a good thing for shareholders. All right. Cowboy reverse split is you have 10 shares and you get 1 share and price goes up. Well, that happens too if it's a 10 to 1. Ian says bank is a cover call ETF, and I think it's not risky. The 60 to 90% dividend paying ETFs give other cover call ETFs a bad name. Yeah, no, it's a good ETF. And keep in mind too, bank, one of the things that they will do with bank is that if the market is being really strong bullish, they will actually pull back on the covered call. So instead of writing on, maybe 33%, they might only write on 10% while it's really pumping because they want to capture some of that upside for their shareholders. So yeah, bank is really, really good. And as I said, we're going to have an interview with the CEO of Evolve coming up really soon. I'm going to be filming that interview on Tuesday. All right. How's everyone doing? I think everyone's doing good. Have you been live since 4? Yes, we have. Cowboy, diesel is heating oil, usually dyed, and a could sense cheaper. Okay. Ian, I won't go over 15% yield on the covered calls. Not all are garbage. All right, fair enough. Martin Hitchcock is in the house. Evening all. Let's see. I see she has some videos. Scratch. I'll check her out. All right. QQQ. TTI is a company that treats water for the oil and energy services. Let's take a look at TTI. Let's take a look here. We got the thing over here. TTI. Here we go. Theogenesis Therapeutics Corporation, or, well, let me see here. I have a feeling you're talking about Tetra Technologies, though. I'm going to go to Tetra Technologies. Let's just take a look. The description will tell me, but I have a feeling that's one we're looking at. Diversified oil and gas service company focused on completion fluids and associated products and services, water management, frac, flowback. Yeah, this is the one. This is the one, TTI right here. So, and I'll pull this up here. And these companies like this that provide, I technically would call it support services for the oil and gas industries. They tend to do pretty well. Even one of the beautiful things is even if oil's struggling, sometimes these companies are still doing okay. So they're not bad companies to look at, that's for sure. All right. Let's see. Jim says, "Well, had to get my butt off the sofa to comment on the floating nuclear reactor, and knowing the history of the McBarge, I think it's a terrible idea." Okay, fair enough. Fair enough. Let's see. It's cost more to treat separate oil and water than you need to dispose of brackish water. Bank is a great ETF. I don't know about QQQ, but I heard YM funds are doing reverse splits. Let's see. Vineet, that's good advice. 15 is high enough. All right. And let's see. We'll do you still have your Solana ETF sold? I do. I do. I still have it. I still have it. It's probably down. Actually, let me just take a quick gander here. I have not looked at it yet recently here since things started falling. Yeah, it's total return 2.87%. Wow, the GOAT list for the challenge this month is going to be completely different. Except for London Gold. London Gold, we already know London Gold is owning everything. It's like yeah, let's just give we'll give the championship to London Gold and say, "Yep, that's it. We don't need to do it." It's all London Gold for sure. All right, here we go. Cowboy, hey Candace, maybe we need a new question code. QQQ sounds like a stock today. I know. Every time I see you guys talking about QQQ, I'm looking at it, I'm like, wait a minute, are you quoting a question? And I'm realized, no, we're talking about QQQ. Yeah, maybe we should do the BBB. I don't know. We'll figure it out. Added the video to my watch later. Let's see. Try to pressure the Evolve CEO to raise the dividend on bank. Tell him Ian says it's time. Okay. I'll try to remember that. I'll see what we can do. Do you think financial funds like bank or BK a good hedge for tech decline? Um, I think I think the banking system. So the Canadian banking system, it is built off of basically when they designed it, they sort of looked at the Scottish system and they use that as for inspiration. So for that reason, it's created instead of a whole bunch of regional banks like you see in the United States, it's created all of these more central banks and it's given the stability that is really really good. So when tech goes in decline, the banks do tend to be okay. Obviously, they're impacted somewhat, but they can weather anything. So are they good hedges? I think they're good hedges. They're not gold, but I still think that they're a solid choice. SES is another service company that is rocket ship. Yes, absolutely. Michael, QQQ is a listing for TO maintain the correspondence between the composition and weights of the securities in the trust and the stocks in the NASDAQ 100 index. Is a listing for TO. Okay, are we talking .TO like the TSX to maintain the correspondence between the composition and weights of the securities in the trust and the stocks in the NASDAQ? I'm not 100% sure what you're asking, Michael. Maybe rephrase it. I'm not 100% sure what you're asking. Paul, I am back to September 9th balance. Yikes. Corey says, hey, question. So if you sell and buy back, is that tax harvesting? Not exactly. So basically what you're looking at, and here, I was going to say the whiteboard, but we don't need the whiteboard. When you sell a stock that has gains on it, so it goes up, you generate something called capital gain. So basically 50% of that win is taxable. So what tax loss harvesting does is it looks for a stock that's not doing so well and it sells it. So that way there it generates the opposite, a capital loss. And then it applies the capital loss against the capital gain so they don't pay as much tax. So that does free up money. Now, they don't buy that same stock back because if they were to buy that same stock back within 30 days, it nullifies the capital loss. It basically then becomes it becomes what they call a superficial loss, meaning that it's a loss, you can't use it for anything. So what they'll normally do is they'll sell off some of their losers. They'll use that money to get rid of the taxes on the winners, and then they'll invest that money in something else, some other stocks or other set of stocks, ETFs, whatever. But that, yeah, that's how they would do that. Now, normally they do this every year because as you get closer, you have to have it done before the end of the year. In other words, not sold before the end of the year, it has to settle. So we have a T+1 system. So that means the day after you basically you need a full business day after you've sold it for it to settle. So, technically you could do tax loss harvesting up until December 30th. I would think that would be cutting it too close. Personally, I would if I'm doing it, I'm having it done by Christmas just to be on that safe side. Because if it settles even a second after the year it clicks into 2026, it doesn't count. So definitely something to keep in mind. Pathfinder, what are your thoughts on the constellation companies? I'm so confused why I'm still holding them at the moment. Yeah, so Constellation Software, it's spin-off, so Lumina and Topicus.com. They're reeling lately. They're reeling. So these are Canadian. These are of course Canadian tech companies, and well, there's a few issues. One, people are worried that a lot of the software that they provide could just be done for free through AI. So there's that concern. There's concern that AI might hurt the business. Also with Topicus, their big, well loved CEO is basically stepping down. So that he's kind of like he's almost like the Warren Buffett of the company. So it's it's not a good thing. It's not a good thing. So people are a little bit concerned, and right now they need to stop the slide. They need to show that they can use AI with their software options, because a lot of the companies, like you look at Constellation Software, they've bought up a whole bunch of smaller companies. They devour companies. So they need to find a way to use AI with that to make their product even more desirable than it is. If they do that, it should fix things out. But could there be a bit more rough water ahead? Yeah. If we go into a bear market, is it gonna look pretty? Nope, it won't. All right. Any thoughts on CJR.B down to 4? Seems like a long shot. Sounds like a penny stock right off the bat. Let's take a look. Let's take a look here. CJR. Okay, here we are. Chorus Entertainment. All right, here we go. Okay, let's oh yeah, I can see what you mean. Yeah, a little bit of a drop from 9 cents to 4 cents. I get worried. I do get worried with penny stocks. One of the reasons I get worried is that, well, when you look at them and come down here and you'll see their market cap. So the market cap on this one is $7 million. So 7.8 million. Not a very big market cap, not a very big moat. So when things go horribly wrong, sometimes companies like this can really, really, really take a hit on the chin. Now, if we go into their back end, let's just take a gander here. Return on assets negative 23. That's never good. Doesn't look like they have any debt that I'm aware of, but they're definitely. I don't think they're profitable. I don't think they're currently profitable. They're also, yeah, yeah. I'd be a little weary about this company. I don't know if I would get in on it. I would be careful if you are going to play it or gamble with it, because it would be a gamble. Um, Make sure that it's money that you are prepared to lose, because there's a good chance that that could happen. But at the same time, if it recovers, that's it. Well, let's be reasonable here for a second. Let's take a look at one other thing here. Um, and do I even have the data here? Well, this is interesting. They actually have a pretty good volume on them. Look at this. 1 million. So that's not an average volume, but that was at least the last day traded. So I was going to say if it had a very small volume, I'd be super careful about going in, but it does look like it has a volume that might be able to support a play on it. But be careful, Martin, on this one. Yule says, is it possible that the AI bubble isn't sustained from just speculation, but actually AI traders? That's a good question. I think there's a whole bunch of different things. Not that long ago, sort of a science communication YouTuber, Hank Green, he did this thing on AI, and he showed all of the interconnectivity between different, all of the different AI companies. So everything from Microsoft with NVIDIA in the middle, and OpenAI, and a few of the others, and how they're sort of, in a way, they're propping each other up. It's kind of like this web of money that's being moved around. So if that AI bubble, if it's truly a bubble, I would probably wouldn't say so much about the AI traders, but I would say it's more or less the big companies propping each other up. And it might be a situation where it's like, we know it's going to make money, but until we get there, we need to keep propping each other up. Maybe that's why they're doing it. That I'm not sure, but I would be, yeah. I, I still don't think it's a bubble, but I think there's going to be some collateral damage nonetheless. Bubble or no bubble. Um, can you use HBTE to tax loss harvest? If it's in a non-registered account and you sell it, yeah, it's still the share price part is still considered a loss. And the nice thing, here's a kind of a neat thing about HBTE, is it only looks at the share price, right? So all of those dividends that you received, even though you're not as down as much as it appears you're down, the dividends aren't taken into consideration. So you get that full down. So that's kind of cool. Lord Fubar, tax loss selling kicks off the Santa Claus rally. Yes, correct. Buy the dip on Topicus. Bitcoin at 93,600. Oh, I know. I wonder if the div on HBTE will be 43 this December. Well, let's find it. We'll find out. I mean, it does thrive on volatility, so I don't foresee a dividend cut, at least this month. But keep in mind too, we're only looking at a one movement on Bitcoin. If Bitcoin completely rallies back up this week, it could be a different story altogether. But we'll see what happens. Yeah. If you look at the return on Constellation since its IPO, mind blowing. Yeah, it's a huge. I mean, well, heck, let's take a look. Here we go. Constellation CSU, and I'll just do the 20-year here, so you can sort of get a general concept. So from $10 up to 3,343. Now, at one point they did break the 5,000, and now they've retraced a little bit. But here's this big area of support for them is 2,000. Like if they fall below 2,000, I'm super worried. But you've also got some support in here as well, up around 27 in this vicinity here. So, and that's the thing. There's a little bit of support where they're at now, but it's not a lot. There's a lot more down here. So if they do, I mean, they could fall down to like 2,800. They could. I hope they don't, but they could. Still out of your price range? Yeah. What does Curtis still own? Good question. I don't know. All right. Where do you think the money will come out of to go into Bitcoin for it to rally? Basically, I mean, for it to fall, people have been taking money out. So basically people have to put money back in. So I mean, most of it, I think, from my understanding, most of what we're seeing right now has been a retail investment. So retail investors pulling it out. If they put it back in, that's where the money will come from. Now, all of the institution is still in there. Now, I will say one thing, and one thing I'm going to say right now is that Monday is not going to be a good day. I think when the market's open tomorrow, a lot of these investors who've seen Bitcoin absolutely flounder on the weekend and are in some of these spot Bitcoin ETFs, we might see a small exodus there as well. And so we could see Bitcoin break below 90,000 on Monday. I hope I'm wrong, but I have a feeling that could happen. And mind you, as well, I don't think it's going to be a quick zip right back up. It'll probably be a little bit slower, but I could see, depending on what happens, if we get a bit of a recovery happening on Monday and it defies what I'm expecting, that could be really good for Bitcoin. But I have a feeling we're going to see a little bit more of a retraction tomorrow morning. BBB. There we go. Now I'm thinking of BB8, but that's fine. Seems to me that AI is really cool, but it's not cash return on investment for now. I mean, what if it takes more time than people expect to get returns on investments? Yeah, AI is, I mean, the problem is in a way, everybody kind of gave away the product. So, most people have AI for free. So it's hard to monetize something. If you let a genie out of the bottle like that, sometimes it's hard to get it back into the bottle and put a price tag on it. So yeah, I think a lot of the bigger companies are looking beyond, the basic AI that we have now. They're looking at things from some of the agents to some of the robots. And I don't know if you guys seen that video of they were introducing a robot. I think it was in Russia, and the robot took a few steps and then fell over. It didn't do very well. It looked like it was kind of walking like a little old man, kind of like the old Joe Biden walk, but then it lost its footing completely. Oh boy. Jack says, should I just sell all my crypto and apply at McDonald's? No, no, I probably wouldn't do that. I mean, it's up to you, but I wouldn't do that. Let's see. Chuck says, any covered call ETF on semiconductors? Yes, 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 there is. Give me a second here. I know that there is. Oh no, no. I was trying to think. There is a covered. Well, there is that leveraged. There's leveraged one I was looking at the other day in the dangerous video that has a semiconductor one. But most of your tech ones, so everything from QQCC to the leverage for QQCL will have a good amount of semiconductor exposure within it. So you are going to get that there. Now, I think, and guys, if you guys know, I don't know one off the top of my head, but if you can think of one, a semiconductor ETF, I feel like there's one out there. It's just not coming to mind. Let's see. Gary Gill is sweating. Yep. The CBC doesn't need a crypto coin. They already rug pull Canadian taxpayers. Oh boy. How can you call Bitcoin an investment? It is a pyramid scheme written all over it. And a lot of people believe that. I don't subscribe to that, but I can understand that. First time I ever heard of Bitcoin, I thought it was a scam. Mind you, if I had bought it then, I would be filthy rich right now. But I made the wrong call then. I definitely did. Saul GD video title sounds spooky. Is there a copyright protection in cryptocurrency? Could I mint a Canadian Tire coin? That's a good question. I don't know how that would work. I mean, you can call a coin anything, and because it's a coin, you know, I mean, you could always spell it differently if you're worried about copyright, like TYRE, Canadian Tire, that way. But yeah, well, I don't know that. I don't know. Let's see. I think they're trying to subscription base AI systems, and then agents will be like DLC packages. Maybe. I mean, OpenAI has a lot of subscription packages, but here's the reality. I mean, the truth is, all of the income that OpenAI pulls in through their subscriptions, and it's considerable, it's still not paying their bills. Like they're burning through money. They're burning through money like crazy. Let's see. I heard OpenAI is probably well overstating their profitability date. They may be in trouble. I've heard that. Is Taiwan Semiconductor in the CDR? Good question. I do not know. I do not know if there is a CDR for. Well, I mean, guys, we can always try. Let's see. Let's just see CDR. Here's the CIBC ones. Nope, that's different. That there is different. Taiwan Semiconductor. Going to CIBC. Yes, I am a Canadian resident. Accept all cookies. I never say no to a cookie. There we go. All right, now Let's see what they got in here. Give me a second here. I want CDR directory. Sure, why not? Here we go. Let's take a look and see, because Taiwan Semiconductor is listed on the U.S. exchange, but yeah, I'm not seeing it in here. Thermo Fisher, Texas, Tesla. No Taiwan. No Taiwan. Oh boy. Yeah. So this, yeah, unless, and as I mentioned before, there is another company, another bank that is doing CDRs, and let's see if I can find them. Well, you know what? Let's do it. Let's do it. All right. Let's pull up Google. CDRs. All right, there we go. They're the CIBCs. Who is the other company doing it? BMO. It's BMO. There we are. I was thinking Royal Bank, but no, it's BMO. All right, so here we go. So and BMO, guys, BMO is doing all of these really other country stuff. So this is pretty cool. Let's see, Costco, DHL, Adushka, Tolcom. All right. Anyway, let's just see what we got in here. Switzerland, Germany, US, Netherlands, France, Japan, Denmark. So I'm not seeing anything here that would show Taiwan, but let's go to the US. All right. Sector, we'll go to information technology or just materials. Let's go in information technology, and we'll also, we're also going to choose, we'll go materials at the same time. Let's just see what we get here. Underlying exchange. That's fine. We'll leave it as all of them. All right, let's see. What do we have? We got 8 pages of stuff here. We got, let's see, Palantir, Salesforce. Can I type in? Let's try Taiwan. Whoops. It helps if I spell it right. Taiwan. Let's go. So no, doesn't look like it. Doesn't look like it at all. But I think we should. I think Taiwan would make a great one for sure. Let's see. Michael says, Steve, the reporter on CNBC, said before the government reopened, the company's been saying consumers are getting back, that laying off workers and lower the outlook. That's so far over 1 million layoffs. Yeah. It's going to be interesting to see how this all rolls out as they do reopen the government for sure. Let's see. What a great time to be a contrarian. Look at the cycles, the big ones. There we are. Wish you all the best. Cryptocurrencies are based on speculation, pyramid type games. They're just legal. Okay. Do you know any ETFs that cover green energy, battery storage, and stuff like that? There are some green ones out there. Like I think Wealthsimple has a green ETF that they run. What was it? Just a second. Let me see here. See if I can find it. You guys are asking really good questions today. Let's see here. Wealthsimple green ETF. There we go. Let's see. There's the green bond. Wealthsimple North American green bond. I thought they had something. Let's see. Eco-friendly investment funds. North American Green Bond Index. That's all I seem to be fine. But I know at one point, Wealthsimple had, like, here's a review. Green energy bond. Nope. I don't think that was the one I was looking for. But I know they had a few out there. So, yeah, I will have to look into that a little deeper. Down the road, I'll probably, if I end up doing the research to find it, I'll probably have to make a video because, there are some people that do like green investing for sure. All right. Brian says, I looked into crypto mining way back when Bitcoin was $3. It boiled down to the fact that I didn't want to burn out my computer or tie it up 24/7. Oh, the 2020 vision. Where were you? Understandable. I know I was too busy with that NASA screensaver, the one that was helping SETI, or not, it wasn't even NASA, it was SETI, I think, helping to find signals from space, but it never found anything. Let's see, over 1 million layoffs this year, in the most since 2020. That could be an early recession. That I said on Bitcoin about a month ago that Bitcoin could hit 94,000, that it hit Thursday. Okay, fair enough. Yeah, I mean, the economy's not in good shape. Not in good shape at all. Let's see. I think a lot of times people have bills to pay, loans and stuff like that, and other debt that makes crypto dive more so than the stock market. Yeah, that's fair enough. You know, yeah. Let's see. Oh gosh, I'm almost caught up. I can't believe it. Mark says, I'm guessing that the 70 folks still watching also have their TV on to watch the Coupe de Grey, like me. Nice. Hopefully a Canadian team is winning. I'm hoping for a Canadian. Yeah. A cowboy. Hear that the BC pipeline and gas plant will be owned by USA and will be built with Korean materials. Oh God. Let's see. I remember the NASA one as well. I never did do it, but I know a few people that did. There we go. Data from China export to the US was much lower than USA data. They announced a 10 nothing miss that was lower Friday a week ago. That was weaker that markets rather than AI and tech the most ever bought. Okay, fair enough. Okay, guys, we're at 2.5 hours. So this is normally I ask for final questions, but guys, we're way into the overtime. We've been overtime for a bit. This feels like it feels like one of the Jays games. But guys, I will be back, of course. We'll be on Wednesday. Wednesday, we're going to do the market close, of course, and it's going to be fantastic. It's going to be fantastic. I love it. And of course, before I tune out, a huge shout out to our supers of the day, Pierre, Kiev and Kaz, Mary, and Relaxing Rains, and a huge shout out to Black Crayon. Oh, wait a minute, it's Canyon. I thought it said crayon. It's Canyon. Oh boy, Black Canyon 12. Shout out to Black Canyon 12, our new channel member. Oh, that's kind of funny. That's kind of funny. All right, guys. I will see you guys. Well, like I said, we will be back on the air again on Wednesday. I can't wait. Until then, enjoy your week. Hopefully we get some sanity in the market. Until then, guys. Um, have a great night, and I will talk to you later. Bye bye.